This was a pretty crazy week, even for us.
So many honestly embarrassing headlines for the industry.
It is this kind of sprint and race of like people trying to make money and basically gambling on chain.
Is crypto without rugs? Ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block, and I'm very excited to be joined on the other side of the mic with my former colleague, Access Protocol creator and crypto researcher, Mika Honkasalo. So we've got a lot to discuss. I feel like when I was in Paris, it was quite exciting because there was so much building going on. We saw Lens V2. We saw we had sort of Base, I think, launch its mainnet or something to that effect. They had a big presence at least. Obviously, Uniswap X, we had some news out of Uniswap. So it seemed like there was just a lot of interesting building happening at ETC out of the Ethereum ecosystem. And then today, we just get sort of whacked with so many honestly embarrassing headlines for the industry, from Curve to sort of the bald debacle, as it were. So let's start there, right? Everybody who's listening, or at least most people, will know that this weekend and then spilling over into Monday was at first it was funny and a bit strange, as is often the case in crypto, with a sort of Cambrian explosion of weird meme coins on Coinbase's layer 2 base, with sort of bald taking the top spot of Darling. And it was effectively a rug. And the question, not effectively, I mean, it was. At first, we thought the developer behind it was just pulling a bit of liquidity. And then it sort of like completely, fell off the chart, fell off a cliff. And over the course of last evening, going into, 1, 2 a.m. my time, it seemed as if there were a lot of strange connections to one Mr. Sam Bankman-Fried or Sam Trabucco, at least someone with a lot of similar overlaps, right? We can walk through those and you can correct me where I'm wrong. From my perspective, I'm a skeptic. I mean, I know that we've seen wild stuff in this market, but to think that Sam with his flip phone in his parents' basement is pulling off like multi-tens of $1 million rug pulls just seems a bit too crazy, despite all the craziness we've seen. But the connections are there in terms of, large OTC engagements with Alameda. I think he was an FTT bag holder. There was suggestions that there was a Wintermute connection. Apparently that's erroneous. There was also the fact that the early sort of sushi participant. So those are a few. That's what some folks think at least make him tied, if not to Sam, then to someone very close to Sam, which seems to be still where we are. I've been kind of out of pocket for the past few hours, so I don't know if anything's changed. But with all that sort of lined out, Mika, I mean, it's not Sam, is it?
Yeah, neither of these options of the SAMs available here seems plausible to me in the sense of just basic sanity and life situations these people find themselves in at the moment. But the on-chain evidence, if it wasn't so that they're in the situations they're in, the on-chain evidence would quite clearly in some ways point to them, or at least someone at Alameda, because it's a wallet that has interacted with like Binance, Coinbase, FTX, some OTC. But if you look at the wallets connected to that wallet, that's where it gets kind of really interesting. And I recommend checking out at Frank Researcher's tweet thread, Igor, who also worked at The Block and is now at Wintermute, about this. But basically it has to do with like early liquidity mining, DYDX trading, governance proposals in Sushi that would very heavily point to in the direction of Sam Trabucco or Sam Bankman-Fried, or at least Alameda. And I think the evidence there is quite strong, actually, in a sense, because there just aren't that many people who were doing those things at the size that they were doing it in these specific protocols. So yeah, it is like a very weird situation.
So let's sort of maybe I'll play devil's advocate. what sort of on-chain indicator or proof, as it were, maybe gives you a bit of pause to think it's not SAM? What aspect of the on-chain activity maybe makes you think, maybe that it is?
Well, a lot of people have interacted with like large exchanges in large amounts, and that is not like strong evidence, but there aren't that many people who interacted with like these early liquidity mining programs at that size. And then you can start kind of like ruling out suspects. Igor thought it was quite unlikely that it's 3AC, given there's no connections to like Genesis or something like that. And yeah, it's just like a process of elimination mixed in with kind of a lot of timing based evidence. So if you look at like tweets from Sam Trabucco, and then you about Stargate specifically, and then you look at the on-chain activity that happens right during those tweets, those things are actually very connected to each other. So that's the famous "yes, we did buy all the tokens" tweet. So those things are very, very strange at the very least, and it is like, if it's not at any way connected to them, it's an incredible coincidence just by like the on-chain profile.
So,
or at least like a big one.
Who are some of the other persons of interest?
I think there's like a chance that it would be some early DeFi founders or extremely like kind of degen traders who were in. There's only a small group of people who were liquidity mining Yearn, for example, from the beginning. So, but there are like suspects, sort of quite a few. So it is like technically possible that it's one of them. But yeah, some of the tweets around the on-chain activity specifically start to make it look kind of very, very weird. So I would say it's like there is a huge coincidence here at the very least.
Yes. So any other thoughts on that?
Well, it's worth noting that there is this analysis, quote unquote analysis of it being SPF, because he used one word reply correct many times, and the expression nor to express like the next negative thing in the sentence, and the phrase quite well. If you take the average population, how many of people would have used those exact phrases in that way? I don't know, maybe 15% or something. Like it's I don't know.
But we do know that there are now. Is that historic? Like, did he historically use this, or was this more recently? Because obviously we do have. It would be if you're putting yourself in the mind of someone like this. It might be amusing for them to want to replicate or mimic or give people some form of doubt about who they are.
Sure. Like anything is possible.
Yeah. At this point, anything's possible. What do you think it means for Base? I mean, is this a black eye?
It is a pretty ugly start in some ways, but it's worth noting that the Base chain really kind of wasn't fully ready with all the tooling around it. Wasn't meant to really go to end users as such. People kind of found their way in quite exotic ways to get on the chain and get the trade there. And so there isn't like this infrastructure that you'd expect. Like Uniswap isn't on there or anything like that. So that creates its own issues as well. So I would say it's like a bad start, but also in crypto, I think people kind of forget these things if they're able to onboard like a lot of users on chain. All the major dApps come there, start gathering TVL. It will be a new start at that point, and I don't think it really makes a huge difference. It's just in the moment a little bit dramatic, but that's kind of within crypto. Like it's not the craziest thing that has happened either. So,
is crypto without rugs?
It is a weird race of tooling to kind of detect beforehand what kinds of vulnerabilities there may be in contracts. People adopting those tools, yes or no. The quality of those tools being kind of like up and down a little bit. People finding new ways to go around them. It is this kind of sprint and race of like people trying to make money and basically gambling on chain. And I would say it's just one of those kind of risk parameters that are in there. In this case, specifically with Bold, it wasn't like an exploit or anything. It was just the original deployer adding first a huge amount of liquidity, which caused the price to go up, which wasn't guaranteed in any way. Like it's not clear that that's what was going to happen. But once it happened, like there was value to be extracted. They pulled it, made some profits off of it. So yeah, I mean, it is, people play these like on-chain casino games, and this is like a complex, weird game theoretic variation of that activity, basically.
Yes, the meme coin lords giveth, and they taketh away. What about the Leetswap exploit?
Yeah, that one was a pretty straightforward one where a hacker was able to drain liquidity from pools, and the exploit itself not that interesting. A relatively basic error actually in the contract code. And now the latest situation seems to be that Leetswap is kind of negotiating with the hacker on this, and we have seen previously cases of that, for example, with Mango markets, and so it goes how it goes. Kind of hard to tell, but yeah, it's there's a lot of value in Base right now. A lot of users went over there, and kind of like some users are affected by this, but overall, I don't think it's like such a big deal. It's just one of those things that happens when a new name deploys early some code that isn't that well tested.
Okay, so now turning to the other big news of the week, which only started yesterday. This week seems like it's been a bit longer. Curve. So, I mean, this guy. This market, man. I mean, you borrow, $100 million using CRV tokens acquired at a cost basis of 0. It's like, when are we going to learn the lesson that we can't just invent tokens out of thin air and then use them to lever up?
Well, the key issue here is kind of, of course, borrowing against tokens that can go down very quickly and may have issues around liquidity. And conceptually, it's not different from what we've seen before in the industry with like FTT and other cases as well. But it's also not the same because kind of like the exact details in lending markets matter a lot. What are like the ratios between how much you have to supply an asset to borrow something else, and what are like the caps on that and all that sort of thing. And the curve position from the front of Curve really is a remnant of times gone by, in a way where the position was taken out during like the bull markets, and people probably had like less scrutiny around the safety parameters of that. For example, in this case, like Aave v2 could be affected by one of these positions, but Aave v3 couldn't, and Aave v3 is designed in a way that makes this much less likely to happen.
So what implementations there make it so that wouldn't happen?
Basically, you just cap, in various ways, you can just cap the amount borrowed to make it like reasonable. And probably during the bull market also, there was a bigger tendency to list tokens that have this kind of curve profile, which is large DeFi protocols, kind of blue chip, multi-billion-dollar valuation ones. And yeah, this one like kind of got through all of the lending protocols in a way, and all of the lending protocols have been rated here. So the statistic is that 47% of the Curve circulating supply is locked in these lending protocols, which among statistics isn't like the most healthy one you'd like to hear, I suppose. But yeah, I think the situation is also kind of resolvable here, and partially has been resolved. But the bigger problem would have been if more founders in a way had found this activity, this hobby for themselves, and of going through these lending protocols and having their tokens listed on them. So we're kind of in a happy position that it was only this one situation, more so than like anything more systemic with lots and lots of different tokens.
And what sort of was the domino that kicked off this entire situation?
Well, the positions themselves have been on this teetering on unhappy for a while. and have been kind of attacked already before. So this was always kind of in the radar and something people knew about. What kicked it really off was the hacks of the new Curve pools that
happened over the weekend. It was a $24 million exploit.
Yeah, with specific Curve pools, which had to do with like the compiler, that Viper compiler that was used. Very surprising bug, actually, very difficult to find as well. So whoever did that, did like that impressive job, I suppose, on that front.
A+. Good work.
But that really started triggering the downward price momentum a little bit, and then you knew that if the price comes down a little bit, you're already in this kind of close to the unhappy place here, and right now you are like very near it.
I mean, this is just another lesson, right? Another lesson for our industry. Now we have Justin Sun, who is buying $2.2 million worth of Curve from the founder, Mr. Michael. What do you make of that news?
I think it was somewhat expected that the positions could be exited at that kind of size. We're talking about, it depends on what exactly we're talking about, but we're talking about at least quite an urgent need to get rid of maybe 10 to 30 million of CRV. And I think at some discounts, and which has been done, we can talk about the details of that, but you expected there to be like some sort of buyer at a reasonable price here that would get us out of the immediate situation. If it kind of got worse, then it would be like a bigger problem. I do hope that the lending protocols don't have to go through liquidating this position and hoping the free market kind of bails them out in a reasonable way. But yeah, we'll see how it goes. But I think it's, given that I think there's over 10 million sold now OTC, and the speed at which that was able to be done, it feels like there could be appetite to absorb like maybe another 10 million or something quite easily. And that's already like takes a bit of the problem off the table. So it doesn't seem that existential. It's just kind of bad. And you're lucky that it's only this one specific position and case that's kind of at DeFi's throat at the moment.
We're selling to reasonable buy. We're selling to buyers at the fair market value. That's what we're doing here. That's all we're doing. What happens next? So how does sort of Curve come out of the shadow of this circumstance?
Well, the Curve protocol has lost, I think, more than 40% of its TVL over the past few days. So that shows that people are getting quite out of it for the moment. But the risk on the like Curve pools that have been in use for a long time and are popular hasn't actually like increased because of any of this stuff as such. Like the Curve price has nothing to do with the product in a way. The Curve price has to do with like lending protocols and their solvency more so. So I guess the interesting part is that there seems to be kind of a handshake agreement around not selling these tokens, and that doesn't seem like the most promising thing either in a way, where you could have the classic kind of cascading liquidation problem. So I think it just depends on if things settle down here and the positions are able to be offloaded in a way that like some of the risk is off the table, and it's again going to be like an uneasy position in DeFi, but it's a smaller and it's like a little bit further away, and then we kind of live to fight another day, I guess.
I'm being told that I butchered that quote from Margin Call, so listeners, forgive me. What happens next, just in general, with DeFi? I mean, it seems like the past few days have been bad for its reputation, especially after it's been stuck in the doldrums for so long in terms of volumes, in terms of activity. You look at the juxtaposition of Coinbase's market cap with Uniswap's, the gap has never been higher. And, you know, we see some interesting developments, and then it's just a bunch of Fugazi. I
would say that there is a bit of a lack of creativity at the moment, perhaps in like the DeFi markets, and kind of what you'd hope from this market is that you start building more and more of these baseline protocols that are big, and then you build on top of them more interesting stuff that like brings in users and makes them more capital efficient and makes them more interesting and easier to use. We've spent a lot of time kind of forking these protocols, and we're still spending time doing that in some sense because we just deploy all the same stuff on all these different L2s. So it doesn't feel like there's necessarily that much progress there, except a jump into a cheaper environment. So all these DeFi protocols, they've also maintained their like market share and managed to stay large relative to other protocols very well. So there's clearly like some strength to the biggest names like Lido, Aave, Uniswap, Maker, and some like staying power. But where their next growth phase will really come from, I think that's a complete question mark. It feels like the industry itself is very isolated right now from like anything in a sense, and it's doing kind of its own thing, which means that the available capital is the available capital in some ways, and there's no big push coming to really bring the next growth phase of the industry. So I think it will still be kind of a struggle with that, and hopefully we eventually see more cool stuff being built, more real world integrations, better and better systems with more capital efficient mechanisms and safety measures behind them.
Ironically, this is the Curve situation was one big example of a real world integration of buying a real world mansion in Melbourne, Australia. Well, anyway, take note, market. These are wise words from one Mika. Sir, any closing thoughts before we sign off?
No, I suppose that's it. This was a pretty crazy week even for us, or I don't know, crazy week, crazy 48 hours, even for us, with lots of different news like FTX relaunching and
I know,
a lot of other stuff as well. So
yeah, we'll see how that pans out. I mean, that was something I definitely didn't think was going to happen, just from a regulatory perspective. But I guess if they can sort of revamp it, probably give it a new name. If it's sort of like owned in a sense by the client, this is something that, Loomdart has pontificated ad nauseum about. Maybe there's a chance there. We shall see. Thank you for joining the program.
Thank you, Frank.
Of course. And The Scoop will be back for you again with another great guest. Have an awesome day.